Now, it's been a wild ride for investors in the crypto space, so how can we go about mellowing those waters? I'm Mike Loder. Investment Insights starts right now. Hello and welcome back to Investment Insights, presented by the team at The Investor's Way, where each episode we provide informative interviews about wealth creation alongside practical tips of how you can master your money. On today's program, the crypto market as it stands and how broader demand and, of course, the acceptance of these digital dollars looks to unfold. Andrew Woodward is joining me as my co-host from The Investor's Way. Andrew, you've brought along a friend with you for this one.
Mike, I've got Cheyne from Crypto Calls today. Our first guest for the series is going to be great.
Wonderful stuff. Now, you're joining us from Crypto Calls. Tell us a little bit about it, what you're about. It's a fun industry to be in, right? It looks like a fun industry for someone on the outside.
Oh, it's definitely a fun industry. I just want to say thanks for having me on. So, Crypto Calls, what we do is we take a very personal approach. We look after everyone. We have a community set up where everyone gets to have one-on-one time with some amazing traders and learn what I think is the best skill, the skill that's actually changing the world step by step.
Very well said.
Yeah, well done. So, Cheyne, we've heard a lot about these crypto exchanges and their collapses and the frauds attached to those collapses. So, for our audience, how do they know how to get started or where to get started?
Yeah, I've noticed a lot of people have this same fear. So with crypto, people see things like FTX, like Celsius, where they closed their doors and people just couldn't get their money back. That's not an ideal scenario. Now, in the crypto world, we have had this same saying for a long, long time: not your keys, not your crypto. And what that means is don't keep your crypto on an exchange. You get a wallet that's kept on your phone, it's tied to a little USB, it's unhackable, unstealable, and you have access to your keys. Now, your keys are a 14-word phrase where you're able to retrieve your crypto from anywhere, everywhere. The passphrase can be longer, can be shorter depending on the blockchain, but it keeps your stuff safe.
Security always an important one.
Yeah, wow.
Yes.
So once we've identified an exchange that we're going to use and where we're going to hold our money, like you've just said, so the next challenge is knowing what's the right coin to invest in. Is it the big coins or the smaller coins? Where do we go?
Dogecoin.
Well, don't go to Dogecoin.
Right.
My general first rule of
Noted.
thumb is if it has a dog on the front of it, avoid it like the plague. So when you're picking a coin that you want to invest in, what you want to look at is how long has it been around, the technology behind it. You can head to a place called CoinMarketCap. It's the most reliable for this type of data. You go through, and if you want to have a hands-off approach, then you can buy the first top 10 coins and you'll benefit with the market, much like an index as it goes up and down. You will trace the market and follow the market. But if you want a hands-on approach, we teach technical analysis and get people reading the charts. So I might buy a coin, say tomorrow, and I could sell it the next day, or I could sell it 2 to 3 weeks from now, depending on what the charts say. So it really depends on how much involvement you want to have.
Okay. And so for a lot of people, they've heard of the obvious ones like Bitcoin. And I'm a bit of a dinosaur, so I'm just starting to learn the crypto market. And I've heard this thing, the Bitcoin halving process. Can you just tell us a little bit more about what that is?
Surely. So Bitcoin halving. Now, Bitcoin has a reward system, and every so often they actually halve the amount of rewards they give out to miners. Let me explain.
Please.
So at the banks, such as ANZ, Commonwealth, all the other big banks, they have to have service to send their money around. Now, crypto is completely decentralized, but they still need service, like it's on the internet. So we call the process of providing these services mining. So we solve transactions, the miners will go through and they'll get rewarded in Bitcoin. Now, every 210,000 blocks, which a block is just a series of transactions, money being sent around, they'll halve the amount of rewards miners get paid, which is why crypto gets more and more scarce. Much like gold gets more and more scarce the more we mine it, Bitcoin, it's the same thing.
It's very interesting there. You start talking blocks. I think you and I are having the same thing. We're like, yeah, I'm trying to unprocess it.
Yeah.
With the recent creation of a Bitcoin ETF, I understand that's exchange trade fund. Do you see that having an impact on the market and I guess the price with potentially a broader demand and of course that acceptance as well? We see a lot of regulation coming in. Governments are looking at it quite closely. Tell us a little bit about more broadly what you're saying.
Yeah, so with the Bitcoin ETF, we waited for a long time. Every crypto trader was looking at the charts. Is it going to get approved? Is it not going to get approved? And the thing is, it was always going to get approved. So, but the thing is, when we looked at the price, the moment it got approved, nothing happened. It sat there and we all kind of like, oh, this isn't going to make us all millionaires in 5 seconds. In fact, it actually initially went down before it went up. So I think the benefits of it will be very, very good in the long term, but in the short term, it hasn't really meant much. It has started to trend up, but it will give investors that aren't in the age bracket where they want to muck around with seed phrases and exchanges, and they don't want to muck around with that. They can just go to where they would regularly purchase an ETF, and they can go and purchase Bitcoin. So it gives the exposure. So in short, yes, I think massive investor participation is coming to the market.
And you were talking to me before off air about how the percentage you should be looking at investing into these things. You don't go all in, or you told an example of somebody risking it all and losing it all. Just to summarize, telling people to beware, is that kind of where we're at?
We definitely want to be aware. Whenever we're investing in any asset, we got to look at the risk. Now, we don't ever want to put all our money, like that investor I was telling you about, on one coin. What we want to do is spread it out over a bunch of coins, and then even then, crypto only has a maximum 5 to 10% in your portfolio, nothing more, because it will always be a high-risk asset.
Guys, there's so much more I could discuss on this, but we're out of time. I've got to call it there. Thank you so much for joining us on the program and helping us demystify a bit more
Thanks,
about
Cheyne.
this sector.
Just have me on.
All right. That's the program for the moment. And of course, remember, the information provided in this program is for general informational purposes only and does not constitute professional financial advice. Please do your own research before making any major financial decisions. I'm Mike Loader and Andrew Woodward. Look forward to seeing you again very soon. Be well.
You're watching Ticker. We'll have more in just a few minutes.